Hey guys, since our last update in EOS, we've had some downward movement, which have invalidated some of the supports that we had in previous updates. And EOS is not the only cryptocurrency that's going through this. We're seeing similar action across the entire crypto space. Not a single cryptocurrency has been spared. As a matter of fact, I've exited all my short and intermediate term positions, and I'm looking for a buy opportunity, which I'm going to touch on in just a second. Now, before I start up, as I've started doing, there is a link in the description below, so check that out for the charts that I'm presenting in this video today. So in our last video, we had a green pattern that had been alternate or had been primary, and we had a support set at 233, and if that broke, then that would invalidate. Well, in our past few days, actually, I think on January 21st, we did break below that support we had at 233. And this is actually the old chart that I presented last time. And that was when the green was still primary. It would invalidate as soon as we broke 233, because that would mean it's a lower low than what we hit on December 3rd. And we have done that. So that green pattern is no longer relevant. So this will come up the chart in our next update. That leaves us with the red pattern being the primary motive pattern at the moment. And while that's kind of bad news, the good news is that it looks like we may be nearing a bottom. This is taking the form of what we're calling possibly an ending diagonal. It's following all the characteristics of what an ending diagonal should look like, in that we had a fourth wave bounce that overlapped what we were calling the first wave down. Everything looks very corrective. These look like zigzags. There's nothing that looks like a clean 5-wave impulse in any of these patterns, any of these subwaves. And we are currently finishing off what will probably complete in ending diagonal fashion, which typically precedes a sharp reversal. So right now on this linear chart, we're looking at downward targets as low as maybe 89, 90 cents, something like that. But fortunately, the logarithmic charts are showing a little bit differently. They're projecting a bit differently. And that's very important, because there's a major support right here, marked with this thick red line. So shifting to the big picture logarithmic view, this is what our pattern looks like. So just as a refresher, we had a big rally that started from our everything crash back in March of 2020. We had a big boomerang shaped rally in EOS, very parabolic, very spiky looking. And with the depth of the correction, I saw this as a first wave, and then this correction as being part of a bigger second wave. Unlike some of the other cryptos, I don't see this as being a fourth wave personally, just because of the depth and the preceding structure. So that's good, because the wave that comes after the second wave is the third wave. So that's good for the big picture. Longer term, in the short term, like I said, we did crash down below our low that we hit in June of 2021. So this was the same thing we saw in Bitcoin Cash and Ethereum Classic as well. So those were the initial signalers of some more downside to come across the whole crypto space. So it's kind of strange that it seems like altcoins may give us the earliest signal of things to come for the whole crypto space. Maybe it's not Bitcoin, Ethereum. At any rate, our green pattern is invalidated, so we don't have a double zigzag anymore. And a double zigzag is essentially a giant zigzag in which the C wave is also a 3-wave zigzag. So we were looking at this having been an ABC down. However, with this lower low, it looks far more like a conventional C wave down, in this case, an ending diagonal. I'm going to zoom up just a bit to show this again. So you have a 1, a 2, 3, the fourth wave retrace further than the end of the first wave, which is a classic diagonal characteristic. And we are presumably in the very last leg of our C wave down. So when I move a little bit over, it looks like we're seeing some MACD divergence. We hit a pretty low MACD number here back in December 3rd. However, with the lower low, we're not down as low. So that's usually a sign that we're near a bottom. What do I expect to see in the coming days and weeks? Well, we're a good ways down. Our third wave here, it hit between the 1.32 and the 1.61 extensions, which are typical. It's actually a little bit stretched for an ending diagonal, but you can see anything in a diagonal. Wouldn't put it past the patterns we're seeing to go even lower, maybe all the way down the 2.0 extension of this initial 1.2. So we could go as low as $1.71. I don't expect us to go any lower than that, just because it is a diagonal. And once we bottom somewhere within this purple box, expect one hell of a rebound. So I would like to see a 5-wave impulsive pattern up. No telling how high it's going to go. Once we get a little bit closer, I'm going to have some projections out as to where I'd expect the first wave to go. But hint, hint, sharp reversal coming, maybe a great BTFD opportunity. I'm definitely looking to buy. So I'm going to be putting out updates on what I'm doing in terms of when I'm buying, how I'm buying, and also my allocations for different cryptos. As I always say, you may have a crypto you like or you favor, but if this isn't evidence that all cryptos move together, they all follow the same evidence, then there's no convincing you. I always advise to diversify because you don't know which cryptos are going to outperform. So if you don't know, you pick a bunch of them. I recommend having at least 7 or 8 of them. And like I said, I'll be sharing that in coming days. Now, here's that stronger resistance that I was pointing out below. This is important because this is actually the bottom of the original crash we had in March of 2020. So far, we are looking at this entire thing as a first wave up, followed by a second wave down. In Elliott wave theory, the second wave cannot retrace the entire, well, it can't retrace more than 100% of the preceding first wave. So you can see how this can be a big problem if we actually do retrace below that. That would tell us that this is actually not a bullish first wave, but rather it's probably some kind of a fake out correction. Could be like a fourth wave of a larger correction down. It could be a B wave with a bigger C wave. We'll have to look at the big picture to get that. But as long as we're above this red line below, we should be good. If it falls below that, we may not see EOS recover for a very long time. And EOS is not the only crypto that's facing this threat. So we'll be covering some of the other ones as well in other future updates. But it's just something to keep in mind. I do expect a little bit more downside ahead, but the bottom is getting close. I've drawn this these channel trend lines, which is typically what you see in an ending diagonal. So if that serves as any kind of approximation on timing, we may be getting close, maybe end of this month, early February, we could see a bottom. Some of this may also depend on Bitcoin and Ethereum. Bitcoin and Ethereum had a bit of a bounce today, and it looks corrective to my eyes. So I do see more downside ahead for Bitcoin and Ethereum. Ethereum, I think, was a little bit ahead in its downside. So not sure if we're going to go all the way down to the downside targets we had. I think on Bitcoin, we had somewhere around 21 to 24,000 as our downside target. And with Ethereum as low as 1,100, we're nowhere near that yet. So we're going to see how much the downside that we have there affects EOS. But like I said, in the short term, stay on your toes, expect a little bit more pain in the near term before we have one hell of a buying opportunity. And I'll be on top of that. So don't forget to subscribe to get my updates. And if you enjoyed my video, please give me a like. Till next time, thank you for watching and happy trading.